Let's go a little further on this in terms of you talk to CIOs at pensions, endowments, foundations, and kind of really all across the investment spectrum. What are they saying about crypto right now? So there's obviously an interest, right? You kind of alluded to that, but just are they thinking of this as let me go put 25 basis points in my portfolio and cross my fingers because I think I bought a lottery ticket? Is it something that's more pervasive than that? Just what are you hearing?
Yeah. So the case right now, and I think we just talked about this. I was curious to hear what they're hearing too, and so I did almost like I don't even want to say a crypto 101. It's probably like a crypto 001 mini series that's coming out, maybe out by the time we do this. There's really only two cases that I see in that world for now. One is the monetary fiat money debasement, and saying that crypto is a better way to diversify against portfolio risk assets than other things. And the other is from a venture capital lens, which is this is an ecosystem that is still in the very early innings that will have or may have tremendous value accreting from every piece of the activity. So then you can set aside the store of value coins, and instead you're getting into protocols and assets and all the things that will happen off the blockchain. The way that they tend to participate in that, again, going all the way back to what we were talking about with Dave Swenson, which is, how do you own a piece of that ecosystem? It's not quite equity yet. It might be tokens. They're not going to do that directly, but they might do it through a venture capitalist. They might do it through a public markets manager. And that's how they're participating in a very small way, because what they're starting to wake up and pay attention to is that this isn't going away, that there's real technology here that may well change a lot of business, somewhere down the road. Now, what I would tell you is that concept is not new to any of these people. When I was talking to venture capitalists in the early 90s, every year there was something that was new and exciting. And it wasn't as pervasive as, say, blockchain technology, but it was, Palm computing. And there was these pen-based things way before we had iPhones. And some of those were way too early and it didn't work. And there's always some innovative technology that they're on the forefront of. And clearly, this ecosystem is it today in the same way the internet probably was 20 years ago. And I think it takes time for institutions to embrace any new area. It usually starts with a thought leader like a Yale or somebody like that, first saying, hey, they're interested, and that we've seen those, and then having a run. So if you think about 2017, some institutions were in the news for really investing in some venture funds that were in the ecosystem. But then the price of Bitcoin collapsed. And now you have another rise in Bitcoin. And so people start to pay attention to it. They say, hey, what happened over the last couple of years? What's been developed? It feels like the floor is higher than it was. We now have proof that even though there was this 80% sell-off, we've made all the money back and then some. Maybe now is another time to participate. So you need both the thought leader to move and then proof of concept in the markets that this is a place you can make money and that there's real innovation happening underneath. So all of that is happening. You know better than that ecosystem that it's happening, but they're learning about it. And I think that's where the real capital will come into the space.
Yeah. What's fascinating to me is, of course, you get kind of the innovative, forward-thinking folks to jump in first. In 2018, the first two U.S. public pension funds invested very similar type of fund, right? Venture capital for 80%, 20% basically, give or take, went into Bitcoin. Good market timing. It's up a lot, right? All of that. But what has been surprising is that everyone always talks about kind of breaking the seal, right? The first one or the second one that goes, and then, hey, you get all the fast followers. I'm not aware of another public pension fund that's decided to do that yet. And so it's one of these things where I always go back to the Bill Gates quote of like, we overestimate what's possible in 1 year, but underestimate in 10. And, now we're sitting kind of 2-3 years in. And if you look at various aspects of the institutional world, public pension funds probably way behind where I thought they would have been given that development in 2018. Corporate treasuries way ahead of where you would have thought they would be, right? In terms of now you got Fortune 500 companies and maybe there's more, maybe there's not, but you're starting to see that conversation change. I think the key piece to this whole thing, though, is the world that you live in terms of these large kind of multi-billion-dollar, CIOs sitting and saying, look, this isn't the lottery ticket. right? This is a core part of our strategy. And maybe that's only, 200 basis points, right? But we're going to go and we're going to invest in this ecosystem. And it's not just through one single manager. We're actually going to build a portfolio of managers. We're going to have liquid and we're going to have private and really kind of all of those, timeless examples of what Swenson and Yale have done for so many years, kind of on a macro basis across traditional assets. It feels like that's going to get all rebuilt, whether it's coexistence or replacement in the crypto world. And so somebody's going to figure out, what does the portfolio construction look like for this new world? And my guess is that it actually looks a lot like the old world, just, new technology, right?
Yeah. Well, I think that's just right. And the way it happens, you can almost follow it through the adoption of other, call it asset classes over time, right? So public pensions, pension funds, they will not be the first movers. And the reason has nothing to do with who the CIO is and what they think. It's the governance structure on top of them. So if you have a board that's, firemen and policemen, and good luck trying to, they're not going to know. It's very hard for them to adopt something new, without proof of concept. And that usually starts for them with a consultant. And the consultant isn't in a risk-taking business. So they're not going to promote a new ecosystem like that until they see it in the hands of other people. So what typically happens is you see it with individuals, which is where the ecosystem is today. And then as they have success, you see it in family offices. The family offices or the leaders of those families might sit on the boards of endowments and foundations, and then they bring into the boardroom an acceptance that allows those first movers to move forward. And there's just much less governance constraints on them. And from there, you tend to get to more public pension or sovereign wealth. Corporates are interesting because this is a different dynamic where you're seeing it on corporate balance sheets themselves, not in the corporate pension fund necessarily. So usually the corporate pension fund is slow moving as well. But what we've seen already at these leading mover, really technology-minded CEOs putting Bitcoin on their balance sheet in particular is a new thing. And I think that there's a lot of capital that's going to be coming behind it.